You're a homeowner, either currently at a low rate or you want to be a homeowner and you're a first-time home buyer. The thing with today's market is affordability. How can we make that mortgage payment lower? In today's video, we're going to talk about temporary rate buydowns, which is an unknown strategy and it's really confusing to a lot of people out there. We're going to make it super simple for you. So in a lot of the conversations that I have these days, there's a lot of strategy around what home price, what purchase price am I going to be seeking? The conversations and really working with a seasoned veteran, someone who's been in the industry, either on the mortgage side or the real estate side, working with someone who can talk to that number, because at the end of the day, the amount of house that you're buying, that does matter and it will impact your mortgage, but rate and down payment and other structure strategies can be much more effective in minimizing that payment, fitting into a budget that is comfortable with you, much more so than the actual purchase price. When we think about, negotiating offers and what purchase price are we going to offer the seller, if you take a $30,000 list price reduction or go in below what they're asking for, that is a long-term realization. What I mean by that is that $30,000, you got to think you're not going to get that until you eventually sell or until you refinance the home. That equity is something that we look at in the future. Whereas something like seller credits, where we can pay closing costs, or we can do a temporary rate buy down or a permanent rate buy down, something where we can affect that payment instantly today, that's instant realization. So thinking about strategy, thinking about structure, that home price, that purchase price, it is important. But at the end of the day, monthly mortgage amount is much more important to the buyer because that's what they're going to be spending every single month. That's where their money, their paycheck is going to be going, is that mortgage payment. So how do we affect that? How do we make that as small as we possibly can? When we have a low rate environment, something in the 3s, 4s, even low 5s, it's pretty cut and dry with respect to what strategy or structure we can implement. When it comes to like a cookie cutter mortgage, fitting somebody in a box, that's not what we do here at Priority. We look at the situation and figure out what strategies are out there, what other buy downs, permanent or temporary, what other seller credits to pay closing costs, what other tools can we implement to actually make it more strategic for the buyer? Because it's changed. At the end of the day, what we used to know back in the 1970s, 1980s, that is not the market that we're experiencing right now. What we're experiencing now is we have a higher purchase price, a higher median sales price, and that's going to take a lot more strategy when it comes to people buying that are not high affluent earners. When we have somebody in the tech industry making X amount, how are they competing with the people who don't work in the tech industry, who make less than that? They want to still be able to compete. And so we're positioning our buyers with other strategies to where they are competing with those higher net worth earners, something that they might not have been able to purchase. They're now able to purchase with these strategies and these tools that we are giving them. Everything's always different. Every scenario is different. Every story is different. And so the particular client I'm helping right now, mom was living in an investment property on the 3rd floor and she was getting older. 3rd floors are not easy for 80 plus elderly parents to get up and down. And so we're looking at purchasing a Rambler, and this Rambler at today's prices here in 2026 are just more expensive than they were back in 2021. And so to find the right alignment to meet their budgetary needs, we were able to do a Fannie and Freddie guideline special where we can buy a second property as an owner occupied. So we get an owner occupied rate, and we coupled that with the seller credits buying down the rate. We did a temporary rate buy down. So a 3-2-1 temporary rate buy down allows that 3% reduction the first year, 2% the second year, 1% the third year. But in doing so, paired with that owner-occupied rate, we're actually able to keep their budget. It was within $100 of what the condo was costing them. So we were able to move the parent now closer to my borrower so that they can care for her and make sure she's okay. But it's also a one story, which makes it much easier for the elderly parent. I've spoken with a lot of clients, who basically disqualify themselves. When I ask them, hey, are you a homeowner? They say, oh, I can't buy a home. Well, who told you that? Oh, I just know I can't. when you dig down, they actually haven't spoken with anybody to know that, maybe they think that their credit score is below what the qualifying credit range is. Maybe they don't have enough down payment. Maybe they don't have the income to support a mortgage. When you talk to someone who can actually rein that in and say, actually, we can do X, Y, Z. We can go down to this in FICO score. We can do this in down payment. A lot of people, like, the stigma is that we have to put 20% down on a home loan. You don't need to do that. You can put as low as 3%, and we also have 0% programs. So it's letting them know, again, you don't know what you don't know. And so letting them know that these programs exist, that there are options to buy a home. We have strategies. We have negotiating tactics with seller credits. We have a lot of tools out there at our disposal to really drill down and find a way to make you a homeowner. Because at the end of the day, my question to all new buyers is, if you had a magic wand, what would you like? And so they tell me, this is my budget. This is what I can afford in rent. And so typically they're renters, right? And so we take that rent amount and say, well, what does that translate into purchasing a home? And so we backwards calculate what that means for them. And we open up the doors and say, you can be a homeowner. Here's how you do it. What you need to do first is just talk with us, have that conversation, know what is needed to really make that process as smooth as possible. It does not need to be something where I want to buy a home next week, let's talk now. It could be something where I want to buy a home next year, what do I need to plan for? When you work with a big box bank or just another lender who's more transactionally minded, they're not going to think of these creative structures and creative strategies and really dig into the guidelines to know what is possible. Something that we pride ourselves on here at Priority is really taking that specific, very unique individual's situation, what their goals are for the next 5 to 10 years, and really mold that into, this is the product or program that fits best for you. So we're not going to fit you in a box. It's something where we're actually looking at the full picture going, this is the best rate, this is the best fee structure, this is the best program for your specific situation. Our information is in the description below. Happy to chat with you and look at your roadmap to homeownership, figure out what we need to do to make sure that it is the easiest process for you and that you can actually be happy when you get the keys.